currency update. We've just had the CPI reading come in and it's good. 2.7% year over year, meets the expectation of the markets. More importantly, you can see that the core inflation is staying nice and steady here at the expected 3.3% inflation. What does this mean for the crypto markets? We're seeing Bitcoin up here 2.2% here today, knocking on the door of 99k. I'm going to break down exactly what this latest CPI reading means and how I'm playing this market in this current moment. If you like this type of video, as and when the data comes out, smash up the likes. Do not forget to subscribe. Let's get straight into it. Hot off the press, we got the CPI reading. You can see here, markets were expecting 2.7. It came in at that level, which is very, very good. You can also see that the core inflation figure here at that 3.3 continued to bode well at expectations as well. We do need to note that, of course, the month-over-month reading here has come in at 0.3. Now, of course, this suggests if you were to annualize it, that you're running at a 3.6% inflation, which is not ideal. I mean, for the last 4 months, we've been at 0.2 and we've not seen 0.3 since April. So that's one thing for us to watch. But right now, you can see real time that the market has gone ahead and just fully priced in that we're going to get that single cut at the next FOMC meeting this time next week. Okay, so 18th December, markets are expecting we'll get a 25 base point cut. But something interesting is going on as well. If you look here, this has just started to price itself in, which is that 1.5% of the market is saying, hang on, let's have a double rate cut. So let's see if that comes into fruition over the next week or so. Will more and more people start to price in the fact that we may get a double rate cut at the December meeting next week? I personally think we're going to get a single rate cut. I think 25 base point is more than enough to keep pushing the pressure down on, to keep the inflation pressure down, but at the same time starting to loosen up to not damage the economy. I think that's a fair balance of both worlds. Let's see how that plays out next week. But of course, markets will be paying attention. You can see here, as and when the data come out, Bitcoin did deliver a nice green candle here. But really, we now need to focus on the next set of hurdles. And the main hurdle here for Bitcoin, if we bring out the drawings back again, if we bring out our lines and chart patterns, is we can start to see that we're at a very, very important level. And that is the Fibonacci level here of the 1.41 level. This is 97.7k. And you can see we're struggling here. We spoke about this in my video yesterday. We're struggling around this level. We need to hold this level. If we need to come down to 89, no problem. Come, bounce, collect some support, and then go mount your attack. Mount your attack at the next level, which is 110. Because the reality is, the Bitcoin move at this point was exhausted. Having, sprung up from 67k, it just went. It just went crazy. It went berserk all the way straight to 90k, continued and extended itself all the way to 101, touching on 102. I mean, it's normal. It's normal for this market to want to just calm down, take stock of where it's at, maybe even pull back a little bit, and then head higher. If you want to understand where I think Bitcoin can pull back to, make sure you get caught up on yesterday's video. But the main update right now is CPI is looking good. If we jump on over to the traditional markets as well, you can see that is working in our favor as well. You're seeing the pre-market is green with inflation coming as expected. So if we take a look at this, stock futures ticked higher Wednesday as Wall Street digested new inflation data. Dow Jones is up, Nasdaq is up, S&P is up. November's consumer price index came in line with expectations. Reading showed 0.3 rise from October, 2.7 increase from a year ago. If you take out food and energy, which is your core CPI, 0.3% month over month, and 3.3 on an annualized basis, exactly what we went through. Let's take a look at this. So this is from Seema Shah, Chief Global Strategist. She says the following: today's inflation report likely confirms a Fed policy cut next week. We just discussed that. But with monthly core inflation hitting its strongest rate since the inflation scare of early 2024, price pressures are hardly settling at a level that the Fed can be completely at ease with. I think she just covered exactly what we just started the video off with. Look, it came in expectation. So in this individual reading, there's nothing to be worried about, but it doesn't mean we're out of the woods yet. And that's the feeling I get from this inflation data as well, particularly this month-over-month figure I shared with you. This 0.3 worries me a little bit because it reminds me of this level here from January to April when we were struggling with inflation. We thought we broke the back here in May, June, July, August, September, kept getting 0.2. That's good because remember, 0.2 annualized times it by 12 is 2.4% inflation. Not bad, right? But when you start getting that 0.3 reading again, it's just getting you a little bit scared that it may start to want to inflect up. So Jerome Powell will want to make sure that he's really killed inflation off. So that's why I'm ruling out a double rate cut. There is a chance he pauses as well. There is an edge chance that he goes, you know what? I can't risk it. I need to pause and keep it here, wait to the next FOMC meeting, and then see where we're at, right? Because the next FOMC meeting after this is January. Maybe he just says, you know what, I'm going to kick it down to the new year, let things settle over Christmas, and let's see where it comes in at the end of January. Maybe he decides to do a double rate cut then. So it's all to play for here, really, with the Fed meeting. If he gives us, a pause, I think given the current market dynamics, I think it would upset markets a little bit because the market's expecting a 25 basis point cut. So if this doesn't change between now and then, I think the markets could be upset. But that being said, maybe we see the market start to rotate out this week. Maybe we see a little bit of redness in the market, a little bit of softening. Maybe the market starts to pricing that, whoa, inflation is just scaring me a little bit there in terms of that month-over-month reading. Maybe I should take some risk off the table. We might see that happening from investors this week. Like I shared in yesterday's video, I'm more than happy for a pullback here. If we get this kind of a pattern, I want to be buying the dip, right? I want an opportunity to buy the dip. We've not had a good opportunity to buy the dip for a long time. We've had small nibble opportunities in these little flash crashes, but we've not had a meaningful pullback. And, when we get that meaningful pullback, when everybody's scared and fearing greed index starts dropping down again, that's when I know I'm going to get a nice juicy buy. Because right now, despite the flash crashes over the last 24, 36 hours, this market doesn't care. We're sat here at 74 greed. I mean, Bitcoin's still knocking on the door of 100K. That's not a real pullback, guys. If we get a real pullback, we get some of that fear in the market, we start getting some of that FUD back, I'm going to be buying the dip. That's what I'm waiting for. Altcoins, quick note on altcoins, seeing Pepe up 1% here. You got Toncoin up 4%. Ethereum moving at 2.7% up here today, which is good. Wildcoin up 7.5%. You got 5% on Cardano again after a big crash the other day. When the markets crashed, it fell 15%. But again, to be expected when you've had a crazy run here. So take it with a pinch of salt, right? Obviously, the coins which moved so fast when Bitcoin was doing well are going to have a bigger flash pullback, right? That's just normal. I mean, if you look at Phantom here, big flash crash of 15%. But of course, it's gone from, 65 cents all the way up to highs of 139 to then now settle at 120. It's not bad. This is a normal part of markets, fluctuating, getting some of that leverage out, the funding rates reset, and then you get ready for a bigger move to the upside. So all in all, good inflation reading, hints of a little scare, right? We're not completely out of the woods yet. I want everybody, celebrating and setting off the fireworks that inflation is dead. No. That 0.3 figure still lingers there. So Jerome Powell's got a bit of work to do just to make sure he fully puts out that fire. And it's important that he does so. Inflation can reappear and it's difficult. It's difficult to stem the fire once it reappears. So it's important he finishes this off once and for all. If that means he needs to delay for one more meeting, let him. But the reality is we're nearly there, right? We're nearly there. Inflation's nearly over and we're loosening. And 2025 will be a big year of loosening. People should start to see their mortgage payments come down. They should start to see their finance payments come down. That's going to give them a little bit of extra disposable income. And that helps your risk on assets, right? That helps Bitcoin. It helps altcoins, particularly with this bull market we've got going on right now. So I expect to see a good start, end to this year and good start to next year as well. Hopefully you enjoyed this update, guys. If you like this type of content, smash up the likes. Do not forget to subscribe and I'll see you in the next one.